right, well, g'day there, everybody. Thanks a lot for joining me on this Thursday afternoon market recap. I understand it has been a little bit of time. In fact, this is the first recording for this current week, really since that recording which I left you with towards the end of the week just past. I mean, it has been a relatively lackluster type of week so far, outside of the day that we saw on Monday, whereby essentially we got that outside day engulfing candlestick, giving back or at least negating a lot of this 3-day reversal pattern. The markets themselves, really Tuesday through Thursday, or now as at the close on Thursday, they have largely just simply been moving sideways. What doesn't, or at least let me just rephrase this, what is of a concern again is the continuation, the building of, in terms of the MACD. If I can actually just remove the RSI and the stochastics off from my screen. Let me just untick this and also untick the stochastics here. Is that as the market again, all right, albeit a little bit slowly, continues to push in the upward direction. When you think about Thursday through Thursday, and of course, the largest sort of intermediate high relative to where we were in the month of, or at least the midsection of January, what again continues to astonish me is the amount of the lack of, right, I guess, risk or an appreciation of risk, especially when you begin to see the establishment and the continuation of this very much strong bearish divergence here across the board, especially denoted through that of the MACD. This is very problematic for the market, especially in the intermediate time frame. I know it hasn't resulted in anything at the moment. However, okay, I think we are still going to see, right, the MACD, especially on the daily time frame, play out sooner rather than later. I understand, again, you come into the week and you see these 3-day reversal candlestick patterns, or again, it's in combination of the continuance of this bearish divergence. But, and as at this point and as at this juncture, we still haven't broken above, or at least the swing high on the MACD. In consideration of this little pop to the upside, we still haven't seen price action, right, obviously turn yet. But at the same time, I'll ask you the question, do you believe that this is definitively broken out above this swing high over here? If you believe it has, by all means you can, of course, right, choose to trade long. It is in the direction of the prevailing trend, right, on the minor, the intermediate, and also the macro level of this. However, again, generally what happens is when you see the continuance, the construction of this divergence on a daily time frame, you will see a reaction off from, or very close from, or soon after what appears to be that breakout above the swing high, which is actually setting up that negative divergence to begin with. So that is on the S&P 500. When you have a look at the Dow Jones Industrial Average as well, again, you've got the midpoint, or at least the high point, the mid-mark of January over here. We've now eclipsed it again on the Dow Jones Industrial Average. Outside of Monday's candlestick, it has sort of slowed a little bit. Today on Thursday, we saw a little bit of a shake. However, nothing really material whatsoever in terms of a bearish pullback whatsoever. But again, even though we are still briefly holding up above this swing high over here towards the midpoint of January, again, when you're faced with and when you look at and when you recognize the simple fact that we've got very strong negative divergence, again, still establishing, not only on the S&P, but again here on the Dow Jones Industrial Average, it should at least, or you should at least pause for a little bit of, I guess, reflection and ask yourself the question, do you really want to be placing long trades in the face of this bearish divergence? The strongest market of the three has obviously been the NASDAQ. This is coming back up to pretty much relative sort of high at the moment. We haven't really eclipsed it, even though the fast line it is getting up very close to. But again, you just see all of these gaps. The NASDAQ is still printed. We are very much still trending in the bullish direction above the simple moving averages. We're back above, obviously, the exponential moving averages. It is, as I just recognized, the strongest of the three markets. However, again, we are very extended to the upside. The CCI and also the ADX is pushing back on up. We're in the top of the Bollinger Bands. When I sort of contrast this against the industrial average, you can see that we aren't up in that top band to the same degree. In fact, we still have the structure of potentially that leaning double top just here. When I show you this on the S&P 500, very rare to actually see this, but we are pushing back on up into that top Bollinger Band. So again, the markets, in my opinion, they are very much still bifurcated, even though it is still at this particular point, as at the close on Thursday, still more so bullish than bearish. I am very aware and still looking for a potential reversal to play out based off, again, those bearish reversal signals, the bearish divergences, and again, the back tests of those decelerating fair lines that we have spoken about over the weekend. In the meantime, again, just simply sitting on my hands, watching this market from afar, recognizing just the amount and the degree of risk which is out there floating about. I think a lot of people are not really understanding that, or at least they do not intuitively understand that. When you take a look at the transportational average, we're still yet to break above 11,344, so it's not confirming that of the industrial average move at the moment. And also when I bring up that of the Russell 2000 as well, it has actually rallied back on up close to this little swing high over here. We're getting close to 17 or 1,700 at the moment. We're still yet to break above that. So we'll see whether or not we can. But even when I bring up the actual MACD as well, you can see over here towards the late section of December, right? If you wanted to take into consideration this little swing high and then of course the swing high in January, and then just look at the MACD since that, if we were just to poke our head above this area and then get the turn down or get that engulfing candlestick, we're going to have a multi-month, pretty much 3 months of negative divergence forming on the Russell 2000, which isn't really going to work all that well for the broader markets, or at least the breadth of the market itself is really going to deteriorate quite aggressively. So there's things to look out for. I understand we still have obviously Friday's session to contend with until we can actually close out this week. At the moment, the NASDAQ, it's up 190 points. The Dow Jones is up 320. So we're not really seeing the biggest of weekly point or even percentage moves at the moment. It's just pretty much lingering around these most recent all-time highs. I mean, we haven't really seen that definitive push, or at least especially really Tuesday through Thursday at the moment. The S&P 500 is up 46 points. We'll see how the markets close the week out. But again, just to recap this and just to sort of make it a very clear distinction as to why I'm not putting out recordings or why I haven't done so Monday through Thursday, or up until this point anyway, it's just simply because I'm waiting. I'm waiting to see whether or not this negative divergence does play out. I can't say confidently that I am not long. Just watching this market and again expecting, right, this negative divergence to take hold of the market on the sort of the minor and also the intermediate level, and again just buying time, waiting to purchase at lower prices, and that is through to the close as of today, as at Thursday. So appreciate your patience. It's a pleasure to obviously sit down and record this. It's an honor to bring this to your attention. If you have any questions, please email me, success@pivotpoint-trading.com. However, I do feel as though the majority of people, especially in that pro class after breaking down the macro picture, they understand what's going on and they're pretty happy and content to wait, which I appreciate. But again, a lot of people, even here on the public YouTube channel, I just wanted to say thank you for watching this as well. And I think the majority of people here are buying into, or at least understand the amount of risk currently at these elevated levels across the board on the 3 US market financial indices, and they understand why it may be in their best interest to really be pulling back and not actually putting on additional risk at this particular juncture. All right, so on that note, everyone, I'm going to say farewell to you. Really, the crux of the analysis this week is going to be in that analysis class, in that Pivot Point Pro analysis class scheduled for this coming Saturday, like it was last week. Outside of that, it has been a relatively sort of sleepy week in the financial markets. Not a whole lot has happened. We still don't have that clear distinction one direction or another. So we're just simply watching this from afar, and we're going to remain flexible, even if we do need to, right, change our analysis at some future point. However, it still remains to be solid and true, and that divergence is something that you need to look out for and remain aware of, even through to the close on Thursday, even though it hasn't played out at this particular time. Stay patient, stay true to the analysis, remain objective, and I'll see you in this weekend Saturday analysis class, where we are going to detail the top 12 individual trade list, okay, outside, of course, what we do here in this public forum. All right, it's James signing off on behalf of Pivot Point Trading, everyone. Farewell.